All right, welcome back, everybody. This is Trader Roundup Podcast. I'm your host, JCapFX, and this is another Fun Fridays. So, Trader Roundup is a collective of traders where we come together and try and get better 1% every single day. So, we have another special guest on board today. It's another well known trader. You guys might know him. It's Kimmel Trading. So, how's it going,
What's up,
buddy?
everyone? How's everyone doing? I'm doing good. How are you?
I'm doing great, man. So it looks like we have a lot of people in the chat again. If you guys don't know who Kimmel is, Kimmel, why don't you introduce yourself and let us know a little bit about your fun journey?
Okay, I started trading like 4.5 years ago. It's been not long, but long at the same time. Because we compare ourselves to, I compare myself with people that I really look up to that have been doing this for 10, 20, 30 years. And I know that I'm still a baby in this. In the first year, very focused on the process of just trading, and then going to private investors. And then in my second community, FTMO came up, and I was like, oh my God, wait, I can just pay this fee and get a 100K account. And then it was the roller coaster of emotions that funding is. Like, at first, I didn't have the money to pay for challenges, but I still did. So I was extremely under pressure. I failed, I passed, but I really struggled to get a payout at first. In the first 2.5 years of trading, I really struggled to get payouts, and even afterwards, even if I would get a payout, it wouldn't be consistent. And yeah, after like 4.5 years of just grinding, learning, and experiencing the vast amount of emotions that trading gives you, I think I'm in a much better position now. And yeah, I'm more than happy to talk with people about what funding is all about, what companies are all about, what trading is all about. Because at the end of the day, it doesn't matter what company you are going for. It's your results will be a reflection of how much you know. It won't be a reflection of the company being trash or whatever it is. It's like, no, you decided to go for X, Y, and Z company. So you can't really blame them for making money from people that are not consistent. So yeah, I'm more than happy to share insights that I've learned over these past 4.5 years, 3 years of trading prop firms, a lot of years inconsistently. So that's why I think this is valuable, because you're hearing from people, not only me, but also Paladin, Omar, that did it, that did last Traders Roundup. So if you guys are watching this on the YouTube channel of Traders Roundup, I don't know if it's linked in the description if you guys are watching this on my channel, but make sure to go to their channel and subscribe there. And yeah, like, I think it's really good to hear the perspective of people that are doing some, that even though they might be ahead of you, sometimes it's just one step ahead. So sometimes the best teacher is the person that just knows how to take this next step. So I don't think that I'm the best trader. I don't think that I'm definitely not in the top of the prop firms. But yeah, I think the insights are there.
Yeah, so it sounds like you've been with funded companies for longer than I have, right? I think I've been with them for like a year and a half, 2 years. So did you find them before the pandemic happened?
I found them just before the pandemic happened. Yeah.
Okay.
Oh no, it was as the pandemic happened. So it
Yeah,
was
same here.
April. Yeah.
So I guess my kind of question to you was like, were you always trading ICT? So like, if people don't know who we are, right? Trader Roundup is most of us are ICT traders, right? And before I found ICT, like the markets to me just seemed random. Like I didn't, there's other strategies out there that do work, but the way that ICT Inner Circle Trader Michael teaches, I kind of just it puts all the pieces of the puzzle together that I had already been studying. Like I already kind of had a basic idea of how markets operated. I couldn't translate it into a chart. Right. So now when I look at a chart, I can understand order flow. I can kind of understand whose orders are getting paired where, right? Who's getting trapped in the market and which side of the market it's displacing. So before you found ICT, did you have another strategy that you were trading?
Yeah, it's funny because it's the opposite of what you just said. I didn't know why the market moved or that the market moved. what made the market move. But I was using edges that would play out over time. They would be profitable, but I never knew why. And so, but it worked. So I was in my first community that traded patterns. My second community just traded price action, and we were always very focused on candlesticks and whatever pattern was happening and breakout strategies, basically. Then I went into smart money. So this was the first time I got exposed to the idea of liquidity, of pairing orders, like a buy order needs to be met with a sell order, and how that affects how the market moves. That's how I got introduced to extremely understandable order flow, market structure, and etc. That's what I think my biggest leap was in this third 2.5 after 2.5 3 years. That's when I got my big leap in terms of understanding how the market moves. That is what helped me the most when I started learning smart money. And then only 1 year after did I go to ICT. It's funny because I knew smart money before
Hmm.
I knew ICT. And then once I got into ICT, I was like, oh, now I get everything. Now I understand everything that is playing out, how it's playing out, the fair value gaps, the order blocks, the areas of liquidity, and etc. And so I think it gave me much more of a clear understanding of what the market does. And I think that now it's easier to think about the correlation and be like, okay, I think this is going to gravitate towards here. But before, I would still be profitable once in a while. But now I really feel like I understand the market more in depth, which sometimes it's not really needed. Like you have people that just trade support and resistance and are much more profitable than I am. So
Yeah,
at the end of the
exactly.
day, I think everything works. I just really like the way that I'm trading now.
No, it's interesting you bring that up because I was talking with Tom Dante like via DMs. If you guys don't know who he is, he's like he's a pretty legendary trader who traded at some prop firms, and like me and him had the almost the same mentor as James 16 back in the day, and it was mostly just like candlestick patterns, support and resistance. But I think what helped me the most was just understanding the context behind everything, right? Because you could trade a candlestick pattern, but if you don't have any context, then it's almost pointless, right? So, like adding that layer of context and narrative behind why a market's going to a certain location, right? So it's not just I'm taking any specific candlestick pattern at a random level, right? It's more about why is it going to that level and then trading the pattern around that. It's like pattern recognition but on a deeper level, like understanding the narrative behind it, right?
Yeah. Yeah.
Yeah, so I guess so my next question kind of was like what has been your experience with funded programs and I think we're going to touch a little bit about the different types of programs that are out there, right? Because there's people that are probably watching that might be trading indices or futures and forex prop firms offer in my opinion, I had this discussion with Kit earlier, ICT Concepts, and right? The futures prop firms have a different business model. So, like, what has been your experience so far with forex prop firms or just prop firms in general? Because I've tried some of the futures prop firms, right? But their business model is a little bit different. They have a monthly subscription, a reoccurring cost that you have to pay to maintain those accounts, even if you're not making money. Right. So, like, what has been your experience, and like, where do you see the industry going, and what do you think? I guess are the pros and cons of all these different firms popping up?
Yeah, I was as soon as I got introduced to prop firms, I was lucky in the sense that I got in early of understanding what was happening with the prop firm space. And I have YouTube like for the last 3 years now. I've been doing YouTube for like 3 years. And so I noticed that I made a video about prop firms and it was the first video that really popped off. And so if some people don't like the fact that, for example, a lot of what I talk about is based around prop firms, but that's simply what people like to hear, and that's why I focus a lot on that. And I think that that gave me thus far a lot of experience with prop firms where I've traded with FTMO, the funded trader, True Forex funds, funded engineer, my funded FX, my Forex funds, like basically all the most popular ones I've had experience with them. And so,
Yeah, yeah, same
um,
here. Same
yeah,
here.
yeah, and like my experience thus far has been really good in terms of what they offer, because I've never been the type of person that is like, oh, like this rule is stupid. Like, even though at first when my Forex funds released their program, it was they were the first people to have a equity based drawdown, and everyone flipped out. Everyone was like, what the fuck, like this is so bad. And I was always like, okay, it is what it is. Like, I'm the one paying for the challenges. Like, I don't. They're not
Mhm.
forcing me to pay for something. And
But at
so,
the same time,
uh,
it's like forcing you to be more stringent with your risk management, right? If you're going to hold a position overnight, you should be adjusting your stops, especially if you're up a percentage, right? So losing that 5%, that daily 5%, right? If your trade is up 4%, you should be reducing your risk on that position. So the next day, you're not going to hit the 5% loss if it comes back to your break even and like stops you out, right? So it kind of forces you to be a little bit more aggressive with your risk management, which is, in my opinion, a good thing.
the only problem that I would say there is that, for example, let's say you've tested your edge, and your edge does not include being more aggressive with the risk management,
Right.
because you
Mhm.
know that sometimes the market will pull back, and that's just what it is. But eventually it will continue going, because let's say you're trading daily order flow and you have a really good position, it can pull back 5%. I would say it's a lot to pull back, because if I'm trading $1 million and risking 1%, do I really want to let 50K pull back?
Yeah,
Like, not
right.
really. So I think that
No, you're right, you're right.
when people do that with a 10K account, and it's
Yeah.
fine, it's like $500, whatever. But if you really think about the fact that you can be running 50K, and do you really want to let that pull back?
Exactly.
I
It's
think,
like you wanna build that good habit with the smaller account, right? Because when you start managing the bigger accounts, you kinda have to keep that same mindset. You don't wanna just see all your profit just evaporate, right? So
yeah,
even if that small amount of money, right, if it's a 4% gain on the day, you don't wanna see that 4% gain evaporate, because when you start scaling up and your business starts growing, right, that 4% could mean a lot more money. And I find it interesting because I was always interested in like the brick and mortar prop firms, because I'm a little bit older, like I'm 32 years old. So when I was younger, when I first got into trading, it was like 22, 23. Like remote capital wasn't a thing. And maybe it was, but it wasn't as advertised. It wasn't as readily available as it is now. And if a firm saw you, if a firm saw your drawdown, if you were up 4% and gave back 4%, you're probably getting pulled into the risk department and they were going to curse at you. You know what I mean? Like they were going to rip you a new one. So for me, it was always like I'm trying to emulate. If I were at a brick and mortar prop firm, like they would not want to see that huge pullback in my equity, right?
yeah. And in my mind has now completely shifted to, yeah, like, I don't want 5% to pull back. It's
Yeah,
important to keep the 5%, and just slowly but surely making the profits. There's no need to go for a 10% move when you can go for 3% moves. Like,
yeah,
it's fine.
exactly. So many
It's more
times I've
consistent
so
move.
many times I've just tried to hold on for that full move, and it just comes back on me. Like I closed out an Aussie short yesterday, and if I held on, I'd be stopped out at break even. So
Yeah,
like a lot of times, I mean, at least in Forex, you have to be nimble. I mean, right now, it's not like a great swing traders environment, so you kind of have to be
yeah,
nimble, and you want to make sure that, your equity drawdown doesn't get too crazy. So I guess what do you think of all the changes that are happening throughout the prop firm? Like obviously it's great for competition, it's great for the business that some of these new firms are kind of pushing the limits, but at some point you don't want them to push the limits so far that they're not going to be able to pay people out, right? And
yeah,
I think the funded trader does a great job of doing that because they understand like the risk behind certain firms, maybe offering 100% profit split or 95% profit split. Like how does a company in actuality do that and protect their profit margins, right?
yeah. I think, yeah, that's like the big thing that I also tell people, which is, and there's a futures prop firm that does this, which is like, oh, 90% off. And I always think about the business model, which is, prop firms, at the end of the day, they need people to fail. So you can't have a super easy challenge, because you need a prop firm that pays people out, which means they have to be profitable.
Hmm.
And if you're going for a really easy prop firm, that are they really that profitable?
Yeah,
So
exactly. So that
that's
was
always my
also
mind, you know?
it's interesting you bring that up because when I saw Riz in New York City, he had met with I guess the ex CEO of I think it was funding talent, right? So at the time before that company went under, right, the challenge the they weren't mimicking a live market from like phase one to phase two. So there was ways that they could game the system, and too many people were passing and getting payouts. And then eventually they just could not sustain their business because it was so easy that traders were just passing and locking in the profits, right? So
Yeah,
that business model just didn't work. Like they went under. So
yeah,
how far do some of these new firms push it before like they say, all right, this is like the end of the road. This is as far as we can go. Um, because I think eventually, if people really start, I guess, start trading well. I mean, at the end of the day, trading is extremely difficult. Like I think 90 to 95% of people are still going to fail anyway. But you just don't want to make it super easy where the firm is going to go under because there is, underlying risk in making challenges too easy.
yeah. But I think you also can. This is one of the things that I really do when I'm looking at a prop firm, because I need to be very careful with the fact that if I make a partnership with a prop firm, if I make a video about a prop firm, I know the impact that it can have on someone going from for that prop firm. So normally in the videos, I really like to stress out how they are making their money. So for example, you see this happening a lot with true forex funds. I think you've traded for true forex funds
Yep.
for some time, and
Hmm.
you definitely remember the time where they had zero minimum trading days, and phase two was 4% profit target.
Right.
So that was happening, and now they changed it to five minimum trading days and 5% profit target. So now all of a sudden, and they have the time limit. So
It's
that's
interesting
how they make their
because
money.
it's not even like a huge change, right? You're going
Yeah,
from it's just 1 R. Like if you're risking 1%, right, on phase two, it's just 1 R, right? And then it's just the 5 days don't even really to me, I don't really look at because you could literally trade a 0.01 and pass the 5 days.
yeah,
So it's not a major change, right? But I guess on the back end, it has a huge effect on their pass rates, right?
yeah. I don't know. Is it maybe because some people, for example, to pass a challenge, let's say you enter a trade on MT5 and you've entered in a 30 lot trade, and you want to pass the minimum trading days. On MT5, you can accidentally enter instead of a micro lot, enter in like a 30 lot trade. So people would be like, well, fuck, now I'm now I'm out of the Jordan. I don't know if that happens. Like, I know that accidentally could happen to me,
Yeah,
but
like
I don't know.
accidentally over leverage and just randomly pass it.
No, accidentally over leveraging instead of doing the micro lot for the
Yeah,
minimum
yeah.
trading days, and because of that not passing. I don't know if
Oh,
that has.
okay. I see what you mean. Like
Yeah,
they're already passed, right? They've already met
yeah,
the funded amount, and then they accidentally place like a 10 lot, and then all of a
yeah,
sudden they're down. Then now they need to make like another 0.5% or whatever, and then they
yeah,
lose
exactly.
the rest of the profits that they have because they're running out of time. Right. I
Yeah,
mean,
I don't
that's
know if
definitely a
that's
good point,
possible.
like
Yeah,
it is possible, like
it
it
is
definitely
possible
is.
for sure. Yeah, yeah,
Uh, but you got to be extremely careful, I guess, when I mean, you're taking monetary risk in the first place to take that
yeah,
challenge. So you got to be mindful.
yeah, yeah,
You got to be sharp and make sure you're trading the 0.01. Quadruple check. Like when dude, I mean, because you probably use a trade copier too, right? So when I'm
yeah,
placing trades, I'm literally in my dashboard just double checking to make sure all my stops are in place, all my targets are in place, the lot sizes are correct. I set a maximum limit on my lot sizes, so
okay,
I'm never gonna really put myself at risk of blowing up, right? Like,
yeah,
and me and you both kind of trade the same way, where we're risking. People don't understand you have to deleverage once you get funded, right?
yeah,
At least until you prove consistency. And I talk about it with Rodrigo all the time. Like, if you work at a brick and mortar prop firm, you got to earn your risk. They're not gonna just let you trade a huge line right away if you can't prove that you can't manage it, right? So a lot of people, if you guys are getting funded and just blowing it, like you got to prove to yourself that you can actually make money first. Like, do it at the
Yeah.
smallest size possible, even if it's just a micro lot, and prove to yourself that you could do it consistently for a long period of time. Because I mean, right now it's a great time to become a trader because there are so many options for capital, and you don't have to have any type of credentials or background, right? Like literally anybody could
Yeah.
be on the other side of the
Yeah.
screen
Exactly.
and trade. So, like, what are your thoughts on, I guess, the futures funding models? So, I mean, like with the monthly subscription, I'm not exactly sure like why they do it that way. Not only that, like I was talking with Kid about it too. Like the drawdown ratio to like the profit target is
Yeah.
much higher. It's like a 1 to 2. So like they're giving you, I don't know, just say on, for example, on a 100K account, right? They're giving you a 4% drawdown or something like that to make like 10
Yeah.
or 12%. Like it's a big
Yeah.
difference, right? And a lot of times those futures firms are trailing drawdowns. So like for anybody that's trading futures out there right now, like have you do you have experience with some of those futures prop firms, or can you kind of just steered clear from them?
Yeah, I have already looked into futures prop firms because while ICT was not only doing the tweets, but like this 2023 mentorship is based on futures. So I was like, maybe let's look into this. But I didn't like any of the things that I saw because of exactly what you said. One, you have the monthly subscription, but when you trade futures and you are consistent, then I would say like the monthly subscription doesn't really matter
Yeah,
because you're on 100K account, you're making more than
yeah,
$100 per month, let's hope. But I did not like at all the model of you have 4% drawdown for an 8% profit target. Like as said, like um, I always look into all these factors of a company because I don't want
yeah.
to show people the hardest challenge, but I also don't want to show them the easiest challenge because
Hmm.
easiest is not sustainable for the prop firm, hardest is not sustainable for the trader. So like I don't like their model
That's a
because
good
of that
point.
exact same thing. Now, how would I go about it? I would I would do this. Maybe instead of trading futures, I would try because it's definitely different. Going into a prop firm, this Forex prop firms, and trading the CFD. Now, people don't like that idea, but for example, in true Forex funds, I think that the CFD is exactly a replication of what happens in the ES. At least that's what I see in their symbol. I can double check what the symbol says, but that's basically what it says,
Hmm.
which is this is a replication of ES mini futures. And I was like, okay, so that's much more fine than, for example, a CFD because it's like if you're not trading with a 2 point stop, which is kind of what ICT has been doing lately. If you're not trading with a 2 point stop, you can do with CFDs. Like I've
Yeah,
traded S&P 500 on funded accounts and challenges, and it's fine. Like the spreads are not the best because in futures it's the 25 cents, while on the CFDs it's maybe going to be 40 or even $1. Um, but yeah, I would instead of going for those futures prop firms, I would take the hit and go to the Forex prop firms.
yeah. No, that's kind of what I had mentioned too. Like, if the futures prop firms are not favorable for the trader, right? You just kind of have to adapt. I mean, the best traders, honestly, like if they can't find profitability or if they think there's no edge in it, right? Like it's as a professional trader, it's all about finding some type of edge. And if the edge is so heavily leaned towards the house, right? Because you could go months. I mean, look at the ES range. We've been stuck in a range since like April, right? Maybe like the last 3 days it's been rallying, but if you're stuck in a range and you're stuck in drawdown, right? Now you have to fund that account and you're not making any money. And they're not giving you any type of refund, right? So like why does a futures I mean, my question I guess really is why does a futures prop firm have a recurring monthly subscription, right? Like are they paying for platform fees or data fees, right? That maybe some of the Forex firms don't have to do with their exchanges. I mean, it's super interesting for me to look into and think about. But I used to trade at Elite Trader Funding, but I kind of stopped it because you know you know me, like I'm trying to trade big, so like I was trading 10 accounts. You know what I mean? So like if you unless you're getting like the 80 to 90% sales that they do like around their anniversaries and stuff. like it's so expensive to just try and maintain that account. Whereas some of the Forex firms, like you just pay a one-time fee, right? And then when you get the payout, they refund you the money. So you're not spending
Yeah.
money on account maintenance. You're not, you don't have to worry about a monthly recurring subscription that you constantly have to upkeep. I mean, at the end of the day, it could be a business expense, but if you're not making any money, like it's a cost that I'm just not willing to front, because on 10 accounts, it ends up being like 8 to 10 grand a year, right?
Yeah. But by the way, I just checked. I'm on MetaTrader 5 on True Forex Funds, and the US 500 cash is a CFD based on spot on index E-mini S&P 500. So I
Okay,
guess
so
it's
yeah, it's like a synthetic almost, right?
yeah. So and the spread is 50 cents, so it's double of what you get on futures. But I think it's good. Like if you really compare it with the futures prop firms, where
Mhm.
it's much harder to pass, and you have this monthly recurring subscription, you don't get a refund. Uh, like I would rather go for that instead of going for the futures prop firms. I haven't
Yeah.
seen any futures prop firms that I'm like, I like this one. Like if my funded FX or the funded trader comes up with futures, then perfect. But I don't think that will happen soon.
Yeah, and then I mean, like, what I say all the time is if the spread is really that making that much of a difference, just go up a time frame, right? Make your stops a little bit wider. And oh, so another thing though too is like those futures prop firms. A lot of them don't let you hold past like 4 p.m.
Really?
So it's yeah, you can't really swing trade it. So that's another
Oh my
thing,
god.
So like you can't hold any positions or you can't really swing trade them. So I think a lot of
Yeah.
people are
So
probably just better off just avoiding the futures prop firms. I mean,
yeah.
until some other solution comes out, we haven't seen any firms out there that, kind of cater towards like options traders. I mean, there's honestly there might be more regulation behind it too, right?
Yeah.
Because it's they're U.S. regulated securities and stuff.
What I would say is like after hearing all this, and now the funded trader does not have commissions on indexes anymore. They
Hmm.
used to, and that's one of the things that I pointed out in the review that I made about them. They used to, not anymore. They've reduced the commissions on FX to $3. So now they're basically the same as all other firms. So I really do believe that there's no real reason to go for these futures prop firms when you can go for these ones and trade like US 500 instead of futures. And it's like they're not looking at your 100K account and trying to manipulate it. They don't care. And it's like Kyle said, if you are worrying about spreads, if you have that tight of a stop loss, then maybe think about changing the way that you're trading.
Yeah, somebody just mentioned like if you're profitable over time, you're going to make that fee. But so here's the thing: is like if I don't have to pay the fee, why would I? Right?
Yeah,
Like I'm saving $8,000 because I'm just trading at these other firms. Like that's eight thousand
yeah,
dollars that I can just keep instead of paying a firm, right? So I guess like yeah, where do you kind of want to see I guess the industry head towards going in the future? I see that the funded trader is going to offer more capital to traders, which in my opinion is always a great thing because when I look at it again, I'm looking at the working capital, which is the drawdown amount really. And I kind of base
yeah,
my risk around that. Even though I can, at times risk 1% when I'm really in sync with the markets. Like I could do 1% as long as I'm like close to the initial balance. I'll never try and go below like 3% of my drawdown limit because then it makes it extremely hard to crawl out of it. Right. But where do you kind of want to see the industry lead? Like, do you want to see some of the top traders like be connected with maybe private equity and then be able to manage more amounts of capital? Because I mean, in my opinion, that's kind of where I want to go.
yeah. I think in terms of short term, I think that I would love to see the industry heading towards the no time limit type of trading, because we've had these new firms that are really coming up and they're getting very popular, and it's going to standardize no time limit. So
Hmm.
I think that's where the industry is going to short term. We've seen, and this is what I also say about this is what I was also saying in terms of how are they making your money with you, and the thing with no time limit platforms is that most amount of traders still fail in like the first
two
two
weeks, 2 weeks,
weeks.
right?
Yeah, yeah, because people are over leveraging. So it's like it's it doesn't really matter to the company if they have a time limit or not. I think that what matters is that every time you have an account open on 8cap or whatever it is, you have to pay per account that is open. And so if people are not trading it, then all of a sudden you are still paying for the account to stay open. So that's why I see people doing the 30-day limit. But it's I would rather see companies taking the hit and being like, okay, but here you go, no time limit. Because
Hmm.
people will now start gravitating towards the no time limit. I have no doubts about that.
I mean, for a skilled trader, it just makes our lives easier. Like
Yeah,
if we want to trade on a high risk account, right? It's not. I mean, anybody that has skill can crawl out of a drawdown. For me personally, if you guys follow my YouTube channel, right, I'm doing a live fun. I did a live funded challenge at Funded Engineer, right, and the first account that I have, it's already been over a month, I think, and I'm up like 4% or maybe a little bit more. But all
yeah,
of April, I was like break even. So having a no time limit allows me to wait for better market conditions because I'm not a great range bound trader. So
yeah,
a lot of it is really just timing. And I mentioned this to Paladin and Omar brought it up too, I believe, is a lot of traders would just be better off waiting for the right market condition and then paying for the challenge rather than trying to pay for a challenge in a poor market condition. But that comes down to experience because not everybody can identify what is a high probability market condition, right? I mean, this whole year honestly has not been a high probability market condition, in my opinion. I mean, last year was like mostly risk off, right? Like the Ukraine war was going on and was just short, everything. I'm shorting the indices, I'm shorting euro, everything was going down, everything was in sync, right? But now, except for gold, maybe. But now it's like indices are going up and the dollar's going up, right? And then the
yeah,
foreign
yeah,
currencies are going down. So like the markets are decoupled, right?
yeah. Yeah, I've been like even yesterday, I saw the DXY moving up like a percent or something, and
Mhm.
the S&P also moving up a percent, and I'm like, dude, why don't you decide?
Yeah,
What the
yeah,
fuck?
yeah.
So yeah, it's been really interesting this year, and the no time limit challenges have made me think because, for example, I've been doing challenges this whole year. But it's so the way that I've been trading challenges is just so stressful that yesterday I was just like, dude, I just want to stop. I want to finally just put everything aside in terms of time limit challenges, link it to my personal account, and then just trade from there and trade with 0.3% on the funded accounts because I haven't had a drawdown bigger than 5% into 5R, whatever, 5% in my personal account. And then I think, okay, so eventually I will hit the 8% or 10% profit target. So I could just buy and max out all the challenges of the no time limit accounts and just, I don't know, just link
Just
it to
take your
my
time with
personal
it, right?
account. Yeah. And
Yeah.
just be like, well, it is what it is. Like whatever happens, happens.
That's
Because,
that's kind of the thing too. When I like approach a challenge, I'm not trying to say, all right, I'm trying to pass it next week. I don't know, like you really don't know what the market's going to give you, right? So you just follow your process week in, week out, day in, day out, and just let the results pan out however they may, right? And that's kind of how I create an edge. Is you just wait for the right market conditions. You don't try and force your way to pass. I mean, a lot of people were trying to force them getting funded in a week, 2 weeks, right? And then get the payout. It's like you don't have to do that. You can with the no time limits, you can literally, yeah, if you can afford it, right, you can just pay for a bunch of challenges all at once. And that's kind of what I do, right? If you have the money, you have the disposable income, just pay for all the challenges all at once. Then when you do get funded, it's a really large amount of money, right? So with the funded engineer, I just literally max out the allocation and just take your sweet time with it. Even if it takes 3 months, man, that's 500K in
yeah,
capital that you have 3 months
yeah,
later that you might not have, right? Or even anybody listening, right? I mean, the cost of living is different everywhere. So
yeah,
I'm just, it's all relative to where you live. But so another interesting business model that's out there is firms that are like Mint Funding and Surge Trader, right? Where they're offering you a larger amount of capital, right? It might have a hefty upfront cost, like I think it's $6,500 for $1 million account, or like 15K for like a $2 million account. What do you think about those? Because those are now moving towards no trailing. Right, it's a fixed drawdown amount. It used to be trailing. No time limits. Right, it just costs a little more upfront, but you get more capital.
Yeah, what I would say there, I'm looking at the Mint Funding website, and it's it's the thing. People have to look at this and understand where is this making sense for the company. And you see,
If
okay,
you don't mind, you could share your
the
screen if you want, so people can look at the parameters.
okay, how can I share this? Let me see.
If not, I'll
Share
pull it up.
screen. There you go.
Yeah, I'll add it here. Let's see. There we go.
Okay, can you see it well?
Do
Okay,
picture in
so
picture.
you can ask yourself, how does this make sense? And you can be like, okay, one step evaluation, this is good, 10%, fine. Minimum trading days, none. Max daily loss, you only have, well, not only, we have 5%. So yeah, so
50K in a day.
yeah, yeah, so the max daily loss is normal, but the max loss, you only have 6%. So all of a sudden, this target and max loss, they are already almost like 1.8 in terms
Yeah,
of the ratio. So that's a little bit. Then you have the available leverage. This is where they can mess with your edge, because 1 to 10, you can't really risk you can't really risk 1% per trade. So instead of thinking, okay, I have to achieve 10% with this amount of leverage, you actually have to achieve like 20R, because you can't really risk 1%. If you have $1 million, that's $10 million in buying power, which equals 100 lots. 100 lots. Yeah, that's one 10 pip stop trade that you can take at a time on euro dollar. So it's like, this is where they kind of try
yeah,
that you reduce your risk. And if you are reducing your risk, then all of a sudden this one step evaluation and this target becomes harder to hit.
yeah,
So that's what I see. Then you have a much bigger, much smaller max loss. So it's like, and you have a hefty upfront fee. Like
yeah.
this
Like,
is
because
where they try to hit you.
when I look at it, I just think about like how much can I risk in monetary terms and how much am I
Yeah,
getting for my money, right? Like if I
yeah,
spend $8,000 on some of the other firms, I'm going to be able to trade $10,000 $20,000 in monetary risk, and that's still only like a 1/4%, right?
yeah,
Whereas here, you got to pay $7,500 and you're going to risk. So I mean, just as an example, right, for the $1 million account, if I'm doing a 1/4%, it's only $2,500.
yeah.
You know what I mean?
This
So
is yeah.
it's really just like a 0.1% if you were to spend, $1,000 on my funded FX or something like that. I think somebody asked in the chat, what's a good firm that has a fixed drawdown limit, no time limits, and pays out in 2 weeks. I think I'm not 100% sure. Maybe you can confirm. Does my funded FX pay out in 2 weeks or no?
Yes, you get your first payout after 2 weeks.
Okay, and then True Forex funds is that in 1 month or 2 weeks?
True Forex funds is 2 weeks too. It's only the funded trader and my Forex funds that is 1 month. The
Okay.
first payout, then it's 50 days. And with what you just said, I want to also share this. This is from the prop journalist. He also has a YouTube channel, so he's good. Can you just share the screen? This is what Jade Cap is talking about, which is the true backing that you actually have on the funded account. So, for example, on E8, you get a $250,000 account, but because of the drawdown, you only really have $20 to your name, so to say. But on
Hmm.
a 200K account of my Forex fund, since you have 12% drawdown, you have $24,000 of true backing. So this is something that you need to keep in mind every time you are looking to buy a challenge. It's not only about, oh my God, this is so much more money than this other account. You have to think about how much is available to you, how much in drawdown, how much in whatever it is. So So yeah, that's definitely something to keep in mind.
Exactly. There's little small nuances and stuff. Like, what do you think about FTMO not updating like any of their parameters for like the last 2 years? They haven't done
I don't
anything.
know. It's I think that with these new prop firms that are coming out, at first my mind was always like, oh, the FTMO is going to stay at the top because they're just super established. But now you see my Forex fund super established too. The funded trader is super established. My funded FX really coming up. True Forex fund, same thing. Like as soon as you get the same confidence with the funded trader and these other firms as you have with FTMO, people will start asking themselves, why would I go for FTMO? Like, never in a million years would I now say in a video, which I did before, like when I did the first review of my Forex funds, what did I say? I said, if you want to go for a company that you are sure it's going to pay you out, and even now we know that that's not really the case because FTMO likes to pull their
Oh yeah,
strings.
they like to pull the plug. They like
But
to pull the plug on if you're doing
uh,
shady things.
yeah, but we can't really talk about it. At least I can't. But I used to say, if you really want to get paid out and you want a prop firm that is really established, you go for FTMO. You
Hmm.
pay a premium. That's why you pay the premium. That's why you have the bigger profit target. But you know for certain that they are going
Hmm.
to pay you out.
Well, I mean, they're a
Um,
dinosaur. They've been around for. I mean, I was surprised that they've been around for as long as they have. You know.
yeah, but now you see all these other firms coming up and establishing themselves super well with
Hmm.
much better conditions. So you're people will start asking themselves, why would I go for FTMO? Just because the certificates are what people like the most. Like if you see an FTMO certificate or you see a My Funded FX certificate, you're obviously going to lean more towards the FTMO trader because it's much more established.
Hmm.
But soon enough, this will start shifting into the funded trader, funded
Exactly.
engineer, my funded FX, true Forex funds. All these will establish themselves, and FTMO will get left behind. Like
Yeah.
I give it a
For
year
me
for
personally, as
F.
long as that money is hitting my bank account when I pass that first payout, like I don't really, the name doesn't really matter to me. So if you don't like adapt,
Yeah,
you're
yeah.
gonna end up dying, right? Or you're gonna lose more percentage of the market share. Like I don't know what the data is on how much percentage market share some of these firms are pulling in, right? Like maybe FTMO has such a huge lead as far as market share that they don't really have to worry about it, right? They don't have to adapt as much. Maybe they don't have to spend as much on advertisement. I think they've been doing a little more on advertising because maybe they see that their market share is shrinking a little bit. But yeah, it's super interesting to see.
I think if they see that they're losing a lot of market share, they will eventually start doing more discounts. They will update a little bit of their conditions because you've seen that happening, like with the profit share going to 90/10, the extension, all these things. There were
Oh,
things
right, they
that they
did.
didn't
Yeah, they
have.
did change the profit share.
Look, I would say FTMO in a way is like Apple. Like
Hmm.
Apple, all of a sudden is like, guys, look at us. We don't have the notch anymore. And Android users are like, dude, what? Like we had that like 5 years ago. And but Apple is like, oh my god, look at us. We're so much better than everyone. It's like they take their
Yeah,
time,
yeah.
but then they do it. So like I don't really bash on it because they're still leading.
Hmm.
But I would give it a year for them to leave the top three.
No, awesome insights. So I guess with that said, I've got Rodrigo and Kit waiting in the background. We're gonna take a little short break, and when we come back, we'll bring them in, and maybe we could talk a little bit about mindset, and maybe we can talk about some tips to provide some of the viewers, so they can help. We can help them pass their funded challenges. So stick with us, guys. We'll be right back.
Out here on the street, I'm losing my way. You've gotten to me, and that's my mistake. Some might say I can't get too far without seeing your face. Oh, you gave me your heart and took it away. I'm going underground, going was a spark, there's now only doubt. No, no, I've said it before, I'll say it again. Oh, I thought you were sure, now you're losing. I'm going underground, going underground. Till your loving comes around, loving comes around. Going underground, going underground. 'Cause your love is not around anymore. Going underground, underground, yeah. Going underground, underground, yeah. Out here on the street, I'm losing my way. You've gotten to me, and that's my mistake. Some might say I can't get too far without seeing your face. Oh, you gave me your heart and took it away. I'm going underground. Till your loving comes around, going underground, going underground.
All right, guys, we are back. This is Trader Roundup. We're just trying to get 1% better every day. We got Rodrigo and we got ICT Concepts on board.
What up? What up?
What is going on, guys?
Hello, gents.
ICT Concepts doesn't like to show his face.
Well, it's hard.
It might break the
It's
internet.
Beautiful.
How handsome
It's
he is.
beautiful. Yeah, exactly. This beautiful man doesn't want to show his face.
So, what do you guys, Rodrigo? What did you guys think of the conversation? I mean, I know you worked with CTI, right? And they have a completely different model, right? They're kind of targeting long-term traders. They're looking for, I think eventually they're looking for that parabolic growth curve, right? But it just takes a really long time to get there. So I guess if some of the viewers don't know, like 5%ers, they've been around for a long time. City Traders Imperium, they actually fund people with live capital, their real accounts, but you have to hit certain tiers, right? You might have to hit 10% at each tier. They're tight drawdowns. I think initially they were like 4% drawdowns. So, that could take you 3-6 months, 12 months possibly to pass each level. But when you get to the final level, right, you can possibly manage up to $25-30 million. So I think, what did you think of the conversation? Like, where do you see the industry going? You've been involved with the industry for quite a while now, right? On the inside. Me and Kimmel haven't been, right? We're just retail traders, really.
Yeah, well, from the inside, it's really interesting to see how traders evolve. Now, the work that I've done with CTI, I started off as a portfolio manager, which is once you've passed evaluations and you start scaling, you refer to as a portfolio manager. And then I evolved into being a performance coach, helping other traders within CTI do the same thing, right? But because I do a lot of work on psychology, I have mental frameworks, mental models, tools and tactics, etc. I noticed that, I mean, I had access to some stats. I had access to trader statements. I spoke to hundreds of traders. Like every single trader who passed the evaluation, I would interview them. I would study their statement before I met them, and I'll get them to explain to me their strategy, what they're thinking about risk. And I noticed some patterns, right? I noticed some patterns in the traders who of course, once they've passed, how long did they survive for? And I'll tell you, it's a small percentage, right? There's one thing, passing an evaluation, whether it be a 1-step or 2-step. There's another thing, actually being consistent with it, actually reaching payout. So this is and this is, I don't think this is spoken about too much in the funded trader industry. I don't think many traders speak about the how small the percentage is that actually get paid, because look, these challenges are not cheap. They add up, right? Just to be able to get the enough experience and confidence to be able to pass these challenges. The next step is where the real trading happens. That's when real psychology kicks in, because whether it's a demo account or a live account doesn't matter.
Yeah.
Yeah.
That's your opportunity to make money. And
So
this
like,
is
why
where
is that? Why is there that pattern where I guess their psychology just changes all of a sudden? Even though if they get funded now, there's no time limits. Like, why is that? I guess why is that such a huge barrier? Because honestly, if you just were to remove the time parameters, it's no different, right?
I'll tell you what it is. And it's when traders are given a bit more freedom, when traders are given a bit more breathing room, they tend to become complacent. And that complacency leads to laziness. It leads to, right, I've got this. I know what I'm doing. And then they start skipping certain processes. They become less alert with that process that got them there in the first place. And so then very quickly, obviously, then emotions are a lot more volatile. And so when there's stress in the body, you got cortisol running through your veins, adrenaline. When you experience these losses, it's very difficult to focus. And so stress is highly correlated with loss of memory. And so if you literally cannot remember your strategy, imagine that you're so stressed that you cannot remember your model, you cannot remember your rules. So of course, these trades are so many are because they don't
I find that interesting because, like, how come they know what got them to being funded, right? So if they go through that period where maybe they lose their process, what's stopping them from just taking a break and resetting, right? Taking some time off and then coming back later, and then when they're in sync, they know that, all right, my process is broken. Now I'm going to get back to what got me funded in the first place, right? So when they start going downhill, how come they just keep going downhill? Like they can't pump the brakes and just say, let me just take some time off for a second, right? And I guess, do these different parameters, does that actually affect your psychology to the point where the firm actually matters? Because to me, it doesn't. Like, I'm kind of I'm adapting my strategy to make sure it fits within all the firm's parameters, right?
Yeah. I think when traders, from my work that I've done with CTI, I noticed that the traders who adapted their risk model to that of the firm, they tended to do better. And so what happens is, because of the way the risk parameters are set, traders are forced to be risk managers. You're forced to realize, okay, let's say, for example, there's a relative drawdown. That means they got to really protect their downside, right? A relative drawdown, for those who don't know, is a trailing stop out, right? So as you high watermark, as your equity grows, so does your stop loss, right? And so if you were to drop, then and then you end up getting disqualified. You lose the account, even though the account might be in profit. Now, some traders may see this, oh, this is unfair. This is actually a way for the prop firm to catch you out. Okay, maybe some prop firms will do that, but actually, this is what happens in the professional world. When you're at a hedge fund, when you work for a brick and mortar prop firm, they use the relative drawdown. This is what professionals use.
Yeah. Like, as retail traders, we all want the fixed drawdown, right? Because then we can go from the being up 5% to being down 5%. But
Yeah.
like on a, as a professional money manager, the relative drawdown is actually what you want. You don't want huge, steep downturns in your equity. So
Yeah.
a lot of retail traders, people that are looking at the prop firm space, they want a fixed drawdown. But listen, if you want to, have a legit track record and eventually get investor capital, like you need to protect the downside.
What I would say, I would love to add on to this, which is, dude, it's so funny because I made this video, and I kind of don't really script my videos. I know what points I want to talk about, and the video that I'm going to release tomorrow, and this is like a really shameless plug, but I'm just so excited for it because I came to such a big conclusion, which I will say here, so I'm not just shamelessly plugging the video. It's like, I've understood, and I talked with you about this, Jade Cap. You remember when I sent you a text asking, how do you deal with scaling up?
Oh yeah.
Because what happened with me is exactly what you're saying. Like, okay, I scaled up, and all of a sudden I was focusing on the money. So where's the process here? The process is out of the water. Like, you don't see the process. It's just money. It's like, oh fuck, if I enter in this trade and it's a 5R and I'm risking 0.3 and I have this amount of capital, then I'm making this much. This comes from someone that doesn't have the experience. That's someone that hasn't been exposed to the opportunity of making so much money, so to
Yeah.
say. So what I noticed that happens is this, and I came to this conclusion, and I just love it. That's why I haven't shut up about it. It's like, let's say you buy a new camera, a new lens. You buy, no, let's say a new phone. It's more understandable. You buy a new phone. For the next 2 weeks or 1 week, you're going to be like, oh my god, this phone is really nice. Fuck, I love this phone. Oh, I look at this phone and I'm like, I love it.
Mm-hmm.
you know and I feel like the same thing happens with funded accounts.
Yeah.
So you stop focusing on the fact that it's just a phone, because it's not just a phone. It's something new that you wanted and you got it. And so you don't look at it as the reality of what it is. But now 1 year after, you're like, you don't look at the phone and think the same thing. You're just like, oh, it's a phone. So, and the same thing happens with the prop firm space in general. Like, you get a new funded account and you haven't been exposed to this, to an extra 100K. You haven't been exposed to X, Y, and Z. So you keep looking at the dashboard. You keep looking at the possible profits. But there will come a point where it's normal,
Yeah.
And I asked you, like, how do you deal with this? And you're like, I don't know. I just, like, this happens. I also focus on the money once in a while, but I've been exposed to this amount of capital. I've been exposed to $10 million budgets, $20 million budgets. So you've been exposed to this. So there are people that may be making $5,000 on a trade. It's something that they've never thought about.
Yeah.
And now the potential is there, or you make it and you're like, oh my God, this is amazing.
It's honestly a tolerance to risk, because like I used to deliver pizza, right? So when I got a tip, a $20 tip was like, holy shit, like, that was like making my day. And then when I started working, right, now I'm looking at like way bigger numbers. So to me, that it just made me super uncomfortable. And you don't just, right, like again, like what you mentioned with the phone, right? At some point you just become desensitized to it, really.
Exactly.
And you don't want to just go straight into it and just say, okay, I'm comfortable risking X amount of dollars, because if it's changing your process, if it's changing your psychology around how you're managing that money, then you're really not ready for it. And a lot of times people can't catch themselves before it all goes wrong, right? So I don't know. I mean, for me, it was always like, I'm gonna try and I'm a big risk taker, right? So
Yeah.
like I got comfortable at a certain size risk and I try and size up. So
Yeah.
at each point, you just like, it's like a stepping stone. You can't be comfortable risking 2K if you've never been comfortable risking $100, right? So
Yeah.
I
you want
have
to
a
size up
question for you guys.
incrementally. Yeah.
Yeah.
So how many pairs or symbols or different markets do you trade?
So I follow like 4 markets. They're all Forex pairs. They're mostly majors. But I really only trade like 2. I mean, I guess it depends. Like I'll trade all of them if there's a great setup, but a lot of times they're just correlated with the dollar. So you know, I'm
What
never
about
in
you?
more. I'm never in more than one instrument at one time because I can't pay attention. I've tried to do like the hedging thing, and I've tried to like create a basket of trades and put risk on as if I were like operating like a hedge fund. But I just can't. I can't manage it, man. Like I, I can't focus. I want to be focused in my one trade and just be a sniper with that one trade.
Yeah, the
How about
same
you?
thing.
How
The
many
same thing
pairs?
with me. So I look at the DXY and then I pair it with euro dollar, and I just trade euro dollar. Listen. I've tried pound dollar. Pound dollar just hates me, and I hate him too. It's like,
Pound dollar
um,
hates everyone, man. It's
like I think every time I try to go out and try something new, normally I get slapped in the face, and so
yep.
I normally revert back to what I'm good at, and that's euro dollar. So every time I focus on euro dollar, results are really good. Every time I try to think that I'm better than I actually am, then I get slapped back into reality. So eventually I will test other pairs, but main focus is one pair.
Yeah, it's interesting you say that, and the reason why I asked you both how many pairs you trade, because in the most profitable traders are trading one pair, and they are 52 times more likely to reach payout,
Yeah.
right?
We got
Because they're trading one pair.
Kit's gonna jump in, and he's the ES trader. He's only trading
I
ES,
mean,
man.
I'm very monogamous
Yeah.
with my pair.
Listen, I had that conversation with Angelo. Like, coming from construction, right? All the people that were making big money were just specializing in one trade.
Specialists, yeah. I
They were
mean,
just specialized. Yeah, I mean, Kit knows he was in construction, right?
yeah,
The guy that was specializing cabinetry or doorknobs, they were pulling in like multi-millions of dollars a year just because they were the expert at doing cabinetry. If I was going to hire the guy that did drywall, tile, landscaping, framing, he did everything, right? He wasn't making as much money. He's just not, the quality of work just wasn't there. Clients were not happy with it. Like he's trying to do too much.
yeah.
And
Very true.
you know, like you gotta be just a specialist in one thing. And I had that conversation with Angelo, and I asked him too. I was like, because on one of his podcasts, he had mentioned, you know, it's interesting to look at some of the data on the back end because they would have traders, right, that were just maybe just trading the euro, swing trading the euro that made it to payout, and then the next month they were trying to scalp gold. Like, and I asked him, and it honestly, I think it comes down to just people getting bored with something, right? Because at the end of
Yeah.
the day, what we do is boring. And people don't like hearing that because, like, when they look at like Wolf of Wall Street and stuff like that, it's like they want to be the degen gambler. You know, they're going out and doing drugs and like
Yeah.
partying with women, doing like crazy things, and really, you know, I had that conversation with Trader Main too. Literally, we're just like, I'm in a dungeon, like I'm in my office, the majority of the time, and it's just me and a computer screen, right? And
Yeah.
at the end, it's really boring. I mean, me hopping on a podcast with you guys and talking about this stuff, uh, at least lets me socialize a little bit, right? Because I'm
Otherwise,
not
they're
on a
complete
trading floor, you
loners.
know? Yeah. But
It's so true.
I think people get bored with like a strategy and something that just works. And any business that's out there that's really scaled understands that they just stick to one thing. Like they just
Yeah.
do that one thing really well and they tweak it a little bit and just
So I've
get,
got another
you know,
question for you all. On what specific days do you trade, or do you trade any day, all days of the week?
I
Uh,
don't trade. I don't trade every day.
I'll jump. I'll jump in there. I like to practice. I like to catch momentum on a Monday in demo. So I'm looking for any type of consolidation pattern or any sort of extension from Friday in regards to PD arrays. So Mondays, I'm looking at Friday's PD arrays. On Friday, I'm looking at Tuesday's PD arrays. And I don't always trade Monday or Friday, but those are typically what I trade towards. So wherever Tuesday's range was around 930 in the indexes, for example, on Friday, I'm trading there, right? Because price is has this clearance and processing, I think,
Yep.
universally of the T-3, right? So T-2. So I'm trailing the 3 days PD arrays, and by Friday, I'm looking at Tuesdays. and Mondays I'm still looking at Fridays.
Yep.
And but typically Tuesdays I think are a lot more tricky. So I actually found personally my best win rates are on Wednesday and Thursday. So I trade Wednesday and Thursday. I'll demo trade Monday and Friday. Some days, if I'm in a zone, if I'm feeling good, if my live trades have gone well, then I'll step in the market on a Friday or even on a Tuesday or a Monday. But typically it's just trying to catch a rhythm, like a swing.
But so like, what is your trade frequency like? Like, are you just placing one trade on
I mean,
one specific day or multiple
I have a
trades?
730 model. I mean, I have a London-based model that I go off of the 130 candle from. I have a New York open of New York, so mapping out the 6 o'clock in the morning, the 3-hour cycle. So going from 3 a.m. to 6 a.m., then to 9 a.m. So the 3 a.m. candle matters, and then the 45-minute quartiles within that also matter. So typically the 730 on a 45-minute candle is what I teach on Twitter, which is the one shot, one kill.
Kimmel's smiling. I want to throw up like an Albert Einstein picture
Yeah,
of you with like your hair all crazy.
I'm thinking someone is in the chat thinking, oh yeah, he doesn't trade a lot. I just trade this. This is what I heard.
No, well, I mean, I have a model.
No, so like, I mean, what you
day,
mentioned
right?
makes sense to me. Like the,
Yeah.
I know a lot of people plot the Monday range, right? And it's really just like the AMD pattern, the accumulation, manipulation, distribution. So if you have a Monday range, right, or a Friday range, and it's purging one side of the liquidity, you're just really looking to go the other direction, or
Right.
wait for the response and then go the other direction.
Yeah.
What about you, Kimmel? Do you trade on specific days each week?
Yeah, this is one of the and by the way, I just increased the camera so you guys can see the crazy hair.
You look like Johnny Bravo, bro.
I need some tips, bro.
Basically, I think that's one of the things that I still need to improve in my trading, because one, I'm not patient enough to sometimes just say, look, the conditions are not there, so you can just leave the markets. Because I think that's one of the issues with us as traders, entrepreneurs, whatever it is. We've come into the market with this mindset of, if I'm not setting trades, I'm not trading. And even though I try to understand that not trading is work at the end of the day, if you are not trading because the conditions are not there, you are actually working. Wrapping my head around it is not easy. And so sometimes, for example, in this since the end of April, I got caught in the trashy market conditions, which I looked at the DXY and I was like, this looks terrible. What the hell is going to happen next?
I got caught in it too.
But still, I was setting the trades and I did go into the losing streak. And so it's like, I know that I shouldn't be trading all days. I still do, but I know that that's something that after a certain amount of trades, I will have to go. I will do this month. I will go into the data and be like, okay, these are the days that you are not profitable. This is why, and this is how you can improve. And so, even though I understand that this comes from me not yet being that guy. That's what I consider. Like, I'm not the consistently profitable trader that I want to be, because the consistently profitable trader that I want to be is the type of person that looks at a chart and is like, there's no trades, I'm going to leave. So I know that what I do is not sustainable, but it's part of my journey, I guess. So.
And at times it's honestly like, maybe it's just a law of large numbers, because I was trading during April too, because if I don't trade, right, I'm going to lose my edge at some point. And
so
I talked
what
about it too.
Size are you trading? Just curious. Sorry, I didn't mean to interrupt.
No, it's okay. Like, I had mentioned a Kit, like, I don't really, I don't backtest a whole lot, because I don't really find too much value in backtesting. Like, forward testing for me is, I mean, it's the way I've always traded. Like, I've never found a reason to go back and backtest, because I can't go back in time and try and make money off of that data. Right? Like, I'm not, I don't have a time machine like Kit. No.
Oh shit.
So my lot size is like, I guess across some of my accounts, like, I'm never really going over 10 lots. But I've been trading a little bit bigger.
Yeah,
I'll do like a 1% I'll do like a 1%. But again, that's not like a recommendation for everybody out there to do a 1% because I've been trading for over 10 years. So
Yeah.
I didn't just work my way up to being comfortable risking that level of capital.
Yeah.
And
This
even
is where
2 years ago, I was barely trading a standard lot.
yeah, this is where
If
I
you don't have a
would
prop firm, you're just like, in order to trade a standard lot, you got to have at least 10K in your account, I think, comfortably to manage risk appropriately.
yeah, and this is where I would come in and be like, I risk 0.3 on my funded accounts.
Mhm.
So I think that at no given time am I risking much more than 6 slots
Mhm.
per account. Like because I don't know the specifics, I don't really go into all accounts because of what I said. Like I'm not used to more money, so I want to keep those figures out of my mind.
Mhm.
But yeah, I don't risk much more than 6 slots because I'm not there yet. Like I'm not there to be risking 1% on the funded accounts. And so yeah, I definitely don't risk a lot.
So the reason why I asked you guys that, question was because look, over 50% of traders, yeah, they are trading 4 to 5 days every week, and
Yeah.
that the majority of these traders are not. 80% of them are not reaching payout.
Mhm.
Only 20% of
I
them
mean,
are.
I'll chime in and say, like, I used to trade 4 or 5 days a week, and it
Yeah,
never worked.
yeah,
But I was
and
at my job. Like, I was at my job. I was trying to get out of my job, but the only way I was able to do that was lowering my frequency and just waiting for the right setups. And those A+ setups, honestly, to me, they only come around like 2 or 3 times a week. So that's why on the last episode, I walked through some of the leaderboard statistics. I don't know if you saw that episode, Kimmel, with Omar and Paladin, and some of those accounts are taking like 300 trades in a span of like a week, man. I'm like, how many setups are you seeing that I'm not seeing? Obviously, I'm not seeing them, right? I'm just,
Yeah.
but can I make more money than some of those traders? Probably.
Yeah.
well,
Yeah.
look, the top 9% of traders, they are trading on one specific day,
Yeah.
and out of that 9%, 45% of them are reaching payout.
Yeah. And honestly, the biggest whales, like people that I mean, I guess knew from work that traded, they were trading with massive size, but they were trading very infrequently because when the edge appears, the edge is not appearing. I mean, it's the same thing with a casino, right? Like if you go
Yeah,
into a casino and sit at the tables
that's
for
true.
16 hours, like you're going to lose your money.
No, the idea
If you
you
can
want to
wait
go in,
for the
you want to go in and go
right
out.
table to get hot, right? That's you're basically waiting for the right table to get hot,
Yeah.
and then you want to sit down and then
Yeah.
place the bets. You don't want to just go in there and say, I'm gonna spend 10 hours at the casino, I'm gonna make my money.
Yeah.
No, you want to go when the tables are hot, get your money, and then leave.
Yeah.
I could.
Got some
That's
really interesting questions and comments, guys.
Yeah, so let's
Yeah, let's
I don't
answer
have
some
too much
questions.
time, but yeah, let's hop in. Let's pull up the chat, and then we'll also pull up some of these comments. So the live chat will just go, and then yeah, we have some pinned questions in here. Trader Blue says, Kyle, you
How
said in the
long do you
past.
have, Jade Cap? Do we do 10 more
I
minutes?
probably got like 20 minutes or so.
20? Okay.
Yeah, 20, 30 minutes. Trader Blue says, Kyle, you said in the past not to dwell on our investment for these challenges. Yeah, but so I think when this question got brought up was the account maintenance. Like I'm not thinking about the investment. I'm thinking about like my cost basis. If I got to spend money just to stay funded, like to me it's not a great investment because there's these other firms that have zero monthly costs. So for me it's just a cost that I don't need to take, right? If I could save $8,000 a year, I'm going to do that. I'd rather take that $8,000 of expenses and spend it on business travel or something else, right? I can do a lot with that $8,000 that I would typically spend on account maintenance. Secure the bag prop firm. I'm not sure who runs that.
It's who is it? Fuck. He went to Riz's podcast, but he's not. It's oh my god. I don't want to describe it because it sounds racist. But now you understand what I'm talking about.
Oh, I think I know. I think I know what you're talking about.
Swaggy C.
Yeah, yeah.
It's yeah. Yeah, it's Swaggy C that runs it.
Sorry, Krim.
I don't know
super excited.
anything about that prop firm. Never looked into it, so can't give you my opinion.
Yeah, I have a problem with interrupting people because I get super energetic and I get hyped up and I want to just scream at people through the mic.
I forgive you. I forgive you, Carl. Very good.
Yeah, RKS. Yeah, we talked about the 5%ers in CTI previously. I mean, I don't know. Like the models are okay. They're just long term. I don't like what Rodrigo was mentioning. Is it's such a long term goal that I think 1% of people is really looking long term. Right? You can manage up to $25 to $30 million, but are you willing to wait 5 years to do that?
Yeah.
Right. When I think when I stumbled on ICT was back in 2017, and I gave myself a 5-year goal. Like I set that long-term goal and I said, I'm going to go full-time in 5 years. It took me 4 years to do it. And it was extremely painful, emotional, up and down 4 years. I don't know about you guys, like Kimmel, Rod, Kit, like, did you guys have a goal in mind as far as going full-time trading?
Man, I have an issue with that because, for example, when people say, think back 5 years and the person that you were would be super proud of the person that you are now. My problem is that I've always been super ambitious. So I was always like, yeah, I know I'm going to be X, Y, and Z. And so I can't really look back. Oh, he would be proud. Yeah, I would be proud, but I was expecting it. But at the same time, I really wasn't. It's just like that kid dreaming.
Yeah.
But
I mean,
yeah,
did you have like a timeline as far as how long it took to go full time?
Yeah, that's what I was going to say after that. It was also very unrealistic. Like once I got into trading, I thought, okay, like I was paying 100 pounds per month. And I thought, okay, if I deposit 1,000 pounds and I make 10% per month, then I have the fee covered. And obviously I got slapped. But yeah, my idea was, okay, in 1 year, I want to be full time. Little did I know, it took much longer. So
Yeah.
It's very important to keep this long-term perspective.
That's the thing is just don't give up, right? Like you're gonna have rough periods. I mean, Rome wasn't built in a day. Like it takes time to gain a skill in something. Oh, E8 funding. I never even I was looking at them. I mean, Kimmel brought it up as far as like the capital. I mean, there's so many firms out there. I think bespoke funding also. Have you tried bespoke?
No,
apparently
I have
you
not.
can apparently you can get funded up to $2 million. You can pay for five of the 400K challenges, I guess.
Yeah.
I wouldn't do it. To me, that's not a firm I would just go out and pay for 5 of them up front. Some of these other firms, like I'll do 300K accounts, but with bespoke, that's a little sketchy. Like I don't know if I want to drop however much it is. It might be 10K.
Yeah.
Right?
Yeah, I don't have experience with bespoke, even though I've talked with the CEO privately. With E8, they've contacted me, but I never really went after it, so never tried it too.
Do you plan on doing so or no?
Dude, I don't know, because as said, like since the beginning of the year, I've just been super tired of doing challenges. Like I'm really fed up. Like now I'm going to max out to no time limit challenges, and only then will I maybe go for E8. I don't know.
I mean, to be honest, they are like stressful situations that they kind of put you under, even though there's no time limit, right? But at the same time, you're not making any money, So
yeah,
if you're funded at some accounts, like if you're putting more energy into that and you're actually getting paid, yeah, it makes sense. To me, the future prop firms are not more affordable. I don't know how they're more affordable.
It's because you have these. I'm sorry, Kit. Go ahead.
No, I was just gonna add. I think the Q&A conversation with the futures with the prop firms, I thought you guys touched upon it earlier, and it was really good. I'm curious to hear the roundtable, the discussion, really legitimately on, is there a viable business model with a futures prop firm? I've talked with Jade, and I don't know if there is, and that makes me wonder with people that are studying the 2023 mentorship model versus people that are actually legitimately wanting to get funded, what they should be trading, futures, CFDs, and where, and what would that model actually look like? Because
I mean, yeah, I mean, part of
You
that could just be the
know.
regulations, right? Like if they're operating
Yeah.
under more strict regulations for futures.
No, I get it, but like a legit model that doesn't seem to work is futures trading prop funds because of how much it costs, because of their drawdown limits.
Mhm.
It doesn't see. I've heard both of you in the discussion today say or prefer not to trade a futures prop firm account and instead to trade a Forex. For me, that's the point I want to emphasize just from bringing full circle what you guys were speaking about earlier. Yeah, like I'm a futures guy and I was looking at getting into futures prop firm trading. Thinking about it, right? I'm an options guy. That's what I do. That's investments to options. That's my contribution to the discussion. But nonetheless,
Yeah, there's not a whole lot of options, right? I
that's
mean,
what I'm saying.
Yeah.
no pun intended. There's not a whole lot of options
Hmm.
for options or futures traders.
Well, options, you just
For
straight up you pay for an option and you take that options trade on a micro or on a mini on the options ladder, and it can cost you anywhere from $60 to $200 for that trade, and you're
Yeah.
looking for a 6R, 10R.
No, I mean as far as like remote capital, right? There's no unless you're going to like a legitimate brick and mortar prop firm and getting like a series license to trade their capital. There's not a whole lot of I think there's a couple places out there that have prop firms for like equities traders, but I haven't seen any for options traders and the future.
No, I haven't seen any
site.
form of prop and options. But the original question was, or that I would like to reiterate your answers towards were, like, there are no real futures prop funds out there whose model from their subscription fees versus the amount that you're paying versus your drawdown that either of you would recommend. Correct?
Yeah.
Yeah.
None that I know.
Wow. Guys, to me, that's the most interesting. I mean, if you're an audience member listening to two top guys, in my opinion, that is revealing. That's noteworthy. Okay, so
But
listen, if I was a futures trader and I had to adapt, I would just try to trade the CFDs that they
yeah,
offer.
same thing. That's what I would say. That's what I was going to say.
That response. I mean, I think that's what people need to hear.
Yeah, you just have
It's
to figure out the lot size, the leverage and your lot sizing. It's a little
yeah, the
different.
only thing that I would do is like ICT tries to be super precise with like 2 handles of a stop loss. Maybe because of the spreads, you will not be able to do that.
Right.
But yeah, like you can just increase the stop size a little bit. Is it going to mess with your risk reward? Yes, it is.
I mean,
But
again,
at
like
least you can
can't
do
hold
it.
it overnight though either. So like when you're
Yeah.
increasing your stop size, you have to expect a bigger move. But some
Yeah.
of those bigger moves don't come until the overnight session, right?
Yeah. So yeah, that's what I would say. I would go for CFDs. Really, it's the best way. Really, I wouldn't
Looks
go
like
for
there's a
futures.
question for Rod that's in the chat. How many traders use conservative risk management?
I'd say not enough.
Good question. Not enough, right? Not enough. Yeah, I would say the majority are not using conservative risk management. And now that doesn't mean, I guess, risk per trade, right? I'm doing 1%, 0.5% risk. It's high, but conservatively, like accumulatively, I'm not trading a whole lot. So to me, that's conservative, right? If I'm taking one trade every 2 weeks, that to me is conservative risk management, even though I'm sizing up, right?
Yeah. The
So
thing
there's
about
frequency and then there's size.
the thing with risk, guys, that as a funded trader is that you need to know what is my working capital. So if you got 100K funding, you have 10K working capital, then you need to have a look at how many losses in a row, like what is my risk of ruin during my previous back testing or forward tested results. Do I get 8 trades, 10 trades? Sometimes I've seen traders get 15 trades in a row as a loss. So if that's the case, then if you, for example, let's say you have 10 trades losses in a row in your testing, I would then add an extra 50% to that. So you give yourself 15 trades from the break, from the 0 point. So 0 meaning the start of the balance. So you start on 0, right? So give yourself 15 trades in order not to blow up. Now, that
I would
could
say
look
even
very
more.
different for
I would
every
say even
trader,
more.
Yeah.
but at least 15 trades. So that add an extra 50%. So,
Because if
but yeah,
people are
Kyle,
taking,
you're
listen,
right.
if people are taking 20 trades in a day, and there's people out there taking 20 trades in a day, they're gonna blow their counts in half an hour.
Yeah, that's
Yeah.
what I would tell people to understand. It's like, instead of thinking how much am I risking, think about the risk exposure. So if you're taking 20 trades in a day, are you really going to risk 1%? Because your risk exposure is 20%.
Yeah, even if you're
So
cutting your trade, before a full stop, right? You're cumulatively putting on that risk over and over and over
yeah,
again.
yeah. So the potential is there.
Mhm.
Mm-hmm.
Have I ever been declined a payout? So one firm, the prop trading, they were regulated in Australia. They went under. They owed me $6,500. I am not getting that money. They said they were going to provide an update to the community.
No, they
Their
won't.
website's down. Their Discord's down.
Yeah.
Yeah, it's gone.
I loved people saying, "Oh, it was regulations." No, it wasn't.
Yeah.
I doubt it.
Yeah,
Like, I'm
I
not
doubt
going
it
to
too.
put my money on it, but I would doubt it. But yeah, it is what it is.
It is what it is, right? That money is evaporated. It's gone. But that's the risk you take.
Yeah.
Let's see what other questions we got in here.
Whilst you,
That's probably a good one. When you first start, what is your opinion on this? Having a safety net and focusing on trading full time, or having a job, focusing on trading and doing the job? Yeah, me personally. I mean, I guess it depends on everybody's situation. For me personally, like, I'm married. I had a mortgage. I got a car payment. Like, I needed to have a safety net. Otherwise, listen. My wife would never let me quit my job if I didn't at least provide some consistency and have a safety net. So I had to have both. Like, I needed to have a couple payouts and have, I mean, for me, my safety net was pretty big. I don't think everybody needs. I had like enough expenses or enough saved to cover my expenses for like 2 years, 2 or more years. But I also don't live like a crazy lifestyle. Again, I'm just locked up in my dungeon office, and I'm in here most of the time. So, I'm really just paying for electricity and whatever it costs to live. What about you guys?
I would personally, work and trade. Like, I used to work, study, and trade, and like, I think there's enough time for everything. Like, in the beginning stages, you are not going to make money from trading. In beginning stages, you are not going to make money from prop firms. You shouldn't even be thinking of prop firms before 1 year of trading, just because you are going to be blowing accounts over and over again. And so my idea really is, keep working, keep trading, and then just work, and then just funnel the money that you make from work into trading. But because you need to understand, like, it's risky business.
Mhm.
And if you want to do prop firm challenges and not be overly pressured, you need another side income. Like, if you don't have another source of income, then it's going to be really tough as a trader.
Yeah, like, I honestly, listen, I worked a career for like a good 7, 8 years while I was
Yeah.
trading, and it wasn't a fun time because I did not want to work for somebody else, but I just did it because I wasn't profitable. So I'm not going to take the risk and just say I'm going to uproot myself and just start trading out of nowhere when I haven't even proved myself, right? Like, I think a lot of people are thinking about, I'm going to go leave my job so I can focus on trading. Don't do that.
Yeah.
Like,
Yeah.
focus on your job and try and build your income that way and build
Mhm.
the safety net so you feel less pressure to trade every day. Because I don't trade every day. Like, I think in April, I think I took like 2 trades.
Yeah, and look, ICT is here, and what he's saying is right. You gotta live below your means, and I found that my mentors in property, in mindset, right? These guys are multimillionaires, and there's something that they explained to me, and it is what ICT is saying about living below your means, because if you've got, most people, they have this much income and they have this much expenses, right? So the richest, and the way to build wealth is to reverse that. You need to have lower expenses, higher income. And so then the bigger the gap between, and the ratio between your expenses and your income, the greater your wealth, the more freedom you have. But the problem is, trading is sold as a lifestyle. You know, you got to show off, you got to live this certain lifestyle, but all of that is incorrect. It's false. And so a lot of traders, they're not financially literate when it comes to trading, and I've seen this happen to so many traders. And in fact, I've made that mistake myself, right? Thinking that, oh, okay, I've got my first 5-figure payout, right? What can I buy? I've made those mistakes myself. I learned that very quickly. So it's very important that from a psychological point of view as well, living below your means, it means you're not trading for the money. It means you're not, it's not about the money. You're doing it more about the process. You're doing about for those around you. For you're trying to do something with your life that is going to leave this world a better place. And so trading is just a vehicle, another vehicle of creating wealth. So for me, it's also important not just to focus on one source of income or one vehicle of income. You need to diversify. You need either whether it be having a job, whether it be running a different business, whether it be educating or coaching other traders, whatever that may be. It's important to diversify and really just live below your means. So important.
No,
And
it's
that's
interesting you bring that up because I think smart money to me is much more than just trading concepts. Because before I got into construction, I interned at like a wealth management firm, and there were people that had, $1 million in their retirement account, but they were living cash poor. So they were withdrawing money just to cover their expenses because they were living above their means, and they were paying the fee on top of it. So they were constantly withdrawing their money because they didn't make the right financial decision. They were putting away too much money, and now they're eating into their retirement. So that's like a poor financial decision where you're just burning money basically, right? So you can still have wealth but be cash poor. I mean, you really want to have a safety net and have a low cost of living so you can build on the safety net and not eat into it. That's the thing, is like, it doesn't matter how big of a safety net you have, you could blow it on a couple poor financial decisions, right? And it doesn't matter how much wealth you have, right? Like I worked in a golf development with some really high net worth individuals, and some people, were living probably above their means. Like they had like the net worth and stuff, but they were, I mean, they had wealth, but they were still making some decisions. They were trying to keep up with the Joneses, really. Like that level of chasing that, I guess, lifestyle, it could be endless, right?
Wait, could I jump in? I mean, maybe I'm just old school, but if you want to be a trader, trading is a part-time thing, and it's something you have to save for, you have to sacrifice for, and it is a background element to other layers within your life. It should be. It's like school. It should be a commitment and a focus for you, while you're hopefully being fruitful and productive in something else as well. Being singularly focused is okay to a point because you are deepening your own studies and your own knowledge. But I really do think it's about balance. And each and every one of us here, I think, could add to just how important it is to be picky with your setups and to really back test them and to find that probability matrix inside your model, inside your framework, inside the timing of your model. And I
No,
think that's super important.
It's interesting you bring up the part-time thing. Do you think that's like hindering some traders too, or maybe they're not treating it as serious as they possibly should? Like they're treating the part-time thing as like a hobby, and they're maybe not putting enough effort into a part-time thing. I mean, for me, it was hard because I didn't have the results, so I almost treated it like a casino. Like I wanted to just, I
So
guess,
you were
force.
YOLOing everything? Is that what you mean?
Not really. I mean, I just, I think I just wasn't building the right habits around trading. So it took me longer than it probably should have because I was trying to make it, I guess, exceed my personal income from my job, which was hard to do because I was already a high income earner when I kind of scaled up. And it took me a while when I stumbled up on ICT. I think I was making like 50K, and then I think 3 years later I was making almost double that, maybe more than double that, right? So in order for me to replace that income, like that's the opportunity cost that I was not comfortable just jumping off the ship and giving up that salary, right? I was almost stuck in that position where I wasn't comfortable leaving my job because I mean, they say, what do they say? They give you a salary so your dreams die or something like that.
Yeah, no, it's just enough to make your
Yeah.
dreams die, right?
And it's really hard. So like, what's your opinion on, I guess, people that are treating it as like a part-time thing, but maybe not taking it as seriously as they probably should? I mean, to me, it's because like the access to market's so easy. Like it's built like a video game almost. Like you just log in and just start clicking buttons on their phone.
Well, I mean that's where discipline, that's where the rigor of treating it, the academic study, the technical science, the analysis that goes into understanding the theory that's explained by ICT in this coursework. I think that's the investment of time and energy it takes to learn those key fundamentals. That, I mean, those become the building blocks for whatever you're applying in the way of logic. Those are fundamental blocks of logic that you're going to be able to create a framework. And I think collectively, again, like just talking about a model 6 months ago on Twitter, I don't feel like as a community we were as hip to it. There were fewer people talking about it. You see it happening a lot more, but it's not just models, it's also frameworks. And it's not just models and frameworks, but it's also time, right?
Mm-hmm.
Models, frameworks, time, and then we're even including probability, right? And
Yeah, it's a
time.
lot that goes into it, right?
Yeah, I'm just saying, like, these are like layers and components that are being added or reinforced. Typically, it's been throughout the coursework, but I just feel like there's a level of a sense of urgency and of clarity, of candor, of real solutions within the markets, the complexities of the markets that we operate in. I mean, I'll just conclude my point by saying it took me a lot of back testing and research and hours spent to come up with what the silver bullet was declared this last classroom that was delivered. It was reassuring to me, but also like the amount of time, the blood, sweat, and tears that it took for me to get that, and for him to be delivering that to the common day trader now, how powerful that is. Like, I don't think people really appreciate it. I know I do, because I know how hard it was for me to get it. Right.
Mm-hmm.
So anyway, that was my point in it, is the framework, the model, being time-based, I think all really matters. Can you fellas speak on the things you feared most in your trading, trying to get funded on trading your own money early on? Okay, yes. This is going to be, I just wrapped up my part of the piece. Pretty please, Rodrigo. Would you mind jumping in on this question and handing it off to Jaden Kimmel?
Yeah, sure. So personally, so what did I fear most in my trading trying to get funded? I think my biggest fear at the time was the fact that I had a lot of pressure with changing jobs. So for me, it was the fear really came down to, can I pay the bills? And I didn't have a year's worth of expenses saved up. I didn't have that many expenses. So for me, I was working in a trading floor and I had a salary, but I was also getting a percentage of the profits. It wasn't a lot, but when I discovered funded trading, I I took a big risk. And for me, when my back was against the wall, I used that as fuel. That I used that fear because I was fearful. I was nervous, but I used that to to be really aggressive with my process. So I mean, call me different, but for me, I use fear as fuel. I perform better under pressure of fear. So and the reason why I do that is because I spent many years studying fear, my own fears, right, journaling it down, being comfortable with the uncomfortable. And so personally for me, it is, yeah, my fear was actually being average. My fear was not really following a routine. My fear was just being mediocre and living the corporate life. So because I came from all of that, my fear was going back to that. So that's my take on fear personally.
Yeah, so for me personally, like I can really resonate with what you just said because I spoke about it a couple times on I think a couple different podcasts, but I was fearful that I had sunk all this time into trading and it really wasn't panning out for me. My processes were kind of just they were like 50-50. Like I would follow my processes sometimes and then I would blow it up. And that was like a vicious cycle over the course of years. So like even me trying to get funded, um the period when I was trying to get funded and really like press it was when my father was sick with cancer. And then when he passed away, I had a really frank conversation with my one good trader friend. And I had gotten like a huge payout right before he passed away. And I had told him about it, and he was extremely proud of me. And I had told him, I was like, I hope I can do this. I want to go full time in the next like year or so. And he posed a question to me. He said, "What's really stopping you then?" And I honestly couldn't answer it. And he just said, You're just scared." And I think it's important to have people around you that don't know you personally because they're not afraid to tell you that. Like this guy, I've never met him before personally. Like I just met him through ICT's community. That's my friend in Canada. And he said, Listen, you're just afraid of failing." So I honestly think this was, a godsend because the following day I almost got in a major car accident on my way to work. And I was like, I'm honestly risking my life and my health to try and get to my job on time. And I'm not putting enough of my eggs. People say just don't put your eggs all in one basket. But for me at that time period, like my life came to a boiling point where I just said, screw it, man. Like if I fail at this, at least I have 12 months to fail. And I had a nest egg saved up right from that payout. My dad left me a little bit of money behind, but like I was never gonna get my time back. So like if I kept just being I guess on the fence about sticking to a process, I was never gonna get to the point where I wanted to be. So I had to go all in with the process and just trust that. And like now I'm not afraid of any type of risk or anything because taking that jump from like going from the system to leaving the system is so hard. Even if you have a nest egg, it's like, that one payout those couple payouts are not enough for you to, I guess, be comfortable taking that risk, especially when I have a wife at home. I have to provide, right? I think for a lot of younger traders, maybe they're not. I think they have an advantage, right? Like maybe if they're living at home with their parents and they have the cost of living is very low, right? They could kind of figure it out. But at the time, yeah, I was just fearful of failing. But once I got over that fear and I realized like I need to just take the jump and say, screw it, like I'm gonna take this risk. If it doesn't work out, I have the skill set built up. I can just go back to work, right? That was the biggest jump for me. And then ever since then it's been a rocket ship.
Yeah, I think that here you can really see like the difference in life experience that we've all had. Because me being a younger guy, like when I think about this question, the answer that comes the most is obviously the fear of failure, because I don't want to go back to work. I don't want to have a 9 to 5, whatever it is. But at the end of the day, I think this all stems from ego. Like all the fears that I have is more so of how people would perceive me than what would happen with my life. Because let's be honest, like I'm going to turn 23. Like I don't have a family. I don't well I don't have kids. I don't have a wife. Like I don't have many things that make me have to perform besides my ego. Like with YouTube, I have the same thing where in a way I am judged on how good of a trader I am, and then it's everything is ego. Like I don't have the necessity, but I also need to have this drive behind me, because if I in fact do not want to go back to work or whatever it is, then I have to focus on the process. I have to focus on making money. I have to focus on being a good trader, because that's what's going to get me there. And then one of the big things that I also felt is, and I still feel it, by the way, for people that are here, because this is the thing. Jade Cap has been trading for 10 years. I don't know for how long Rodrigo has been trading, in Kit.
About the same.
But yeah, like I've been 4 years into my journey, and I still feel this fear. Like I talked with a trader yesterday, and I came to that conclusion. It's like I still feel fear of failure. Why? Because it's been 4 years. Is it a lot? Again, no. If you compare it with ICT that has been doing it for 30 years, Jade, Rodrigo, and Kit that have probably been doing it for 10, it's not a lot. But at the end of the day,
I've got
it's
15 years, buddy.
15. Fucking hell.
He's a boomer.
Well, wait till it's my turn. Shit.
But yeah, I for people that are here and are 2 years in, 3 years in, that are fearful that maybe I'm not going to make it as a trader. First of all, I would love for you to know my perspective too, and understand that this is normal. So this fear is normal, because like our survival instincts kick in. But yeah, I think my biggest fear in terms of getting funded and trading, it's the ego and the fear of failure. That at the end of the day, it finishes in ego, but it's definitely the fear of failure that I really want to achieve something big with my life, and I really want to have an impact in the future. Um, and I feel like I would be able to do this some other way besides trading. I would be able to get capital from other businesses, but I've been putting so much work into trading that admitting failure would be the biggest hit that I would have in my life, and I don't want that to happen. That's why I keep putting the work in every single day. And yeah, I think like getting funded trading, that's my biggest fear. Is it's definitely the fear of failure. And you think about, like, this happens through losing streaks. This happens when you maybe lose a challenge, lose a funded account. Like this happens, and it's but it's part of me understanding that I'm still young, and that um I'm too rushed, because I care too much about other people's opinions, and I want to prove myself to a lot of other people, and failing would be the absolute opposite. So yeah, that's definitely
No,
my
I
biggest fear.
feel I feel completely feel what you're saying, because you just reminded me of all the fears I experienced in my first 4 years. And in my first 4 years, I didn't make money. You know, there was I was pretty much break even. There were some years where I lost money, and yeah, I felt that I did fear that fear of failure was what I actually began to study. I was just immersing myself in it. Like, why do I fear failure? And so, yeah, I think that anyone who's in their first 5 years, this is normal. Just figure out that, well, understand that you can use this fear, study it, and anticipate it, but then stick to the process anyway. So if you're experiencing fear to jump anyway.
Yeah. I don't know if Kit wants to now talk about his biggest fear. 15 years, man.
No, I mean
So
what's
Yeah,
crazy is when you actually do have a full-time job and when you're in an actual relationship, and trading is just kind of like this side gig for a long time. In my life now, it's all consuming, but for a long time, it just kind of went from one thing to one thing to one thing. And I made a couple investments, and those were like hodls. It wasn't about trading; it was just buying stock, right? So I had a couple decent wins with some early stocks, and then it's like, oh well, let's try options. Learn some retail patterns on some options, and let's jump into some options. And I mean, for me, fear realistically is that demon inside me, right? Like it's funny you mentioned Kimmel ego, like ego, self destruction, and like lack of risk are like these three demons that sit on my shoulder, right? And as a trader, I've had to wrestle them through good times and bad times, right? Like I've had to ride or die with those decisions. And sometimes those decisions have been very profitable, but then other times I've had to make decisions later on down the road that might have been detrimental, you know? And yeah, ICT just asked another question. I want to show that. I could talk about my fear and regret all day, but the number one thing I feared would be just myself within the process. So I think it's difficult for all of us. Here, I'm trying to add his. Additionally, would each of you say, if you could go back to the beginning, would you not tell others what you were doing until you reached your goal?
that's such a great question.
Poof. I say we go around the round table again. I don't mind. I'll try and keep mine short and sweet, and we get answers from the table. It's a great panel.
I guess I'll go first. Like, I never really thought about it like that, but I probably would keep it to myself because my biggest growth curve again was when I was just isolated. I wasn't talking to anybody because I think when you start telling people that you're a trader, you're putting like expectations on yourself to try
Yeah.
and prove it to them, like to try and prove to other people like I'm doing this and I'm profitable at it. So, I'll keep it short and sweet. Like I would definitely not tell anybody and just operate in isolation because that's the best thing you can do, honestly. If you want to do a side hustle, um, I mean, the side hustle thing is you want it to be a full-time thing. So the more people you tell, the more weight and burden that it's going to put on you to try and prove to them that you could do it. I think my life just got to a point where I just said, screw it. Like, I don't care what my family members think of me. I don't care what my coworkers think of me. And I just, yeah, like Rodrigo said, I just took the jump. So, if you guys didn't know this about me, like, I didn't give my company any notice. Like, I didn't even give them 2 weeks because it was just draining me that much. And I was so fearful of like what they thought about me at the time. I was like, screw it, man. Like, they're like, my health was declining. They didn't really care about my time. They started treating me poorly, even though my boss was like cool with me at the time. Like he started showing his true colors, and I was like, all right, these guys don't really, they don't really care about me as a person. So I didn't really owe them anything. It was just it's a courtesy to give them 2 weeks. So
In
I
other
need
words, fuck you, Carl.
yeah, exactly. Yep. Yeah, exactly.
What I would say in terms of myself when I started trading was that when you tell others that you are trading, you have this inevitably next question, which is, are you making money with it? Like that's the next question. So when I go back, I would only tell people that I'm trading to the people that are in the same trading community as me. So for example, before I have some great friends that I met from the first communities that I was in, and so I was never judged in there. But if I think about on the outside of telling people that I know that I trade, it's then you put this expectation, people get this expectation on you, and then you try to keep up with that expectation, which is exactly what you said, Kyle. And it's like, are you making money with it? Well, no, I'm still learning. Oh, but wait, traders normally just make money, right? And you're like, no. And you take a loss, like you have a losing day, and it's like, so how did it go today? Oh, it well. What happened? Oh, -1%. As wait, what do you mean? So you have so much added pressure once you start telling other people that are in your surroundings. I wouldn't tell, like, for example, if I would have met Kyle 4 years ago, I would talk with him about trading
Mhm,
because he knows what I go through,
mhm.
but I wouldn't tell my friends. So
So
only eventually. So
I wanted to add, or just I think that's one of the really huge values of having this community, having a trading community, because it is something that is such a personal journey that you have to go through. It is hard to tell other people. They don't even know what you're doing. They put false expectations on you. They project, even if you're successful, they'll project the level of success that you don't have room for failure. It's like trying to operate in the market with such a tight stop loss that you can't, it's, you're making it difficult to win.
Mhm.
And even if your trade plan's right, even if all's good, you got such this tight stop loss, there's no way to breathe with your plan or your goal or your objective. And I feel like talking to other people um about your goals within trading, I'd say outside of this community of like-minded folks that you can relate to, that are on similar paths, that in a lot of ways are strangers, that you kind of have this brotherhood with within the community, we can relate, and we're here to help each other, right? So I would say lean more on what we've become in 2023, and and that, like, I mean, don't let the cat out of the bag. Slowly grind, do what you got to do. I mean, trading for me was a background thing. It was nothing I declared. It was a secret. I mean, I had a career. It wasn't something I talked about. It was waking up at London before my wife and daughter woke up so that I could trade before having to go sit in meetings during New York. So
An interesting case study that I would go back and actually like look at was when I used to tell my coworkers and my like friends and stuff that I was trading, my performance was worse. And then when I stopped talking about it, that's when my growth curve started inclining, right? It's very interesting to study because I stopped talking to anybody about it. Like people didn't know I was like still grinding and working extremely hard in the background. But I was just doing it for me, right? I wasn't trying to show off and prove it to anybody else.
Mm. And no, I'll echo what you guys are saying. And our a big massive reminder is that the most valuable asset that we have is time. And if we are spending our time trying to prove to others what we are, who we are, what we do, and if we spend our and waste our time on social media saying, look, these are my profits, when really it's a demo account, you are wasting your time when you should be spending time reading the tape, right? You should be spending time on a demo. You should be working on your craft. You should be journaling everything, even journaling how you feel, your emotions when you are forecasting the trade. Journal your emotions whilst you manage the trade. Journal your emotions after the trade. Have that data. The ICT, our mentor, he talks about these things. He talks about tape reading. He talks about going on demo and practicing and not entering the live markets until you're ready. And so, you got that's for me personally, so important to realize and understand and remind ourselves that time is our most valuable asset. Use it wisely.
yeah, and I think it ends up being the same thing as ICT said, that there comes a point where it just becomes an ego game and it becomes a measuring stick, because when people ask, are you making money with it? You want to answer yes. You want to, like, they become well, as you said, a measuring stick. Like, you want to be better. You want people to look at you and be like, oh my God, he's doing well for himself. But what if all of a sudden you are also always saying, oh, no, I'm not making money yet. No, I'm not. No, I'm not. I'm learning. People don't understand that you can't be inconsistent for 4 years in trading. People can't wrap their head around it. Why? Because they don't understand that how trading works in itself. They don't
Listen, if
understand
you
the
just
emotions
compared it to
behind
just
it.
like
So
any other profession, it's the same thing. Like, you don't
yeah,
just go and become senior management. I mean, I think I was young, and I was like, I was guilty of that too. Like, I came into the marketplace, the job market, and I want to just be senior management like right away. And it's the same thing in trading. Like, that expectation where just because you're trading doesn't mean you're an expert as soon as you open an account.
exactly.
Yeah, there's so many people in here. There's so many chat messages. Listen, guys,
But there are. I mean,
I gotta
yeah.
hop on a flight. I would love to chat more with you guys, and ICT's
We'll
in
do
the
it again
room.
next
But
Friday for sure.
yeah, we're gonna do it again next Friday. And listen, I think what ICT brought up is like a great segment into a case study that I was planning on releasing this Saturday, but it's not ready yet. I encourage all of you guys to go and check this series out on Disney. So the first episode is it's called Stress Proof, and it's basically a case study that Chris Hemsworth does with scientists. There's science. It's all backed by data on the fight or flight mechanism. I mean, as humans, we all suffer from it. I'm sure anybody listening to this can understand, like, when you're fearful of a specific situation, right? It can affect your actual biology. So that's gonna be out next Saturday. I'm
Yeah,
not
by the
sure.
way,
I'm
this is
pretty
a
sure it's gonna
photo
be.
of Jade Cap after he goes to the gym. This is not Chris Hemsworth.
Yeah, it is.
Dude, people in the chat are asking me
Live
why I'm
this.
red. People ask me in the chat why I'm red. Like, my blood is pumping right now. That's why. No, my
No,
lighting
he's
is
like,
a
I'm
little
gonna
bit.
miss
My
my
lighting is a
flight,
little bit
bro.
off. So we are actually Rodrigo is going to be hosting Mindset Mondays on Monday. I'm not 100% sure on the time. We will confirm that with everybody and send out a little
Be
promo with the topic.
about
Yeah,
10 a.m.
we're getting
Eastern.
consistent. We're getting consistent with our content scheduling, and we'll be sure to let you know, boss. Appreciate you being here. So
Yeah, really do. Yeah. So again, Mindset Mondays with Rodrigo, and then again, Funded Fridays. Next Friday, I got somebody lined up to come on the pod, a little bit lesser known than Kimmel Trades, but I think it'll be great to network with some people, bring some people up on stage, and give them the spotlight. Yeah, so if you guys have Disney Plus, I highly recommend watching that series. It's an awesome series. It's like a six-part episode series. They go into cold exposure. We should do our
yeah,
own. We
Wim
should do our
Hof,
own case
dude.
studies. Yeah, we should do our own case studies and see how it affects our performances. Right.
Dude, the breathing. I'll say this: the case study for what we do with 7:30 a.m. for sure is that people like it, and we do it the first 10 minutes, 7:30 to 7:40. So yeah, thanks, Jade, for doing this. Thanks for being here, Kimmel. Thanks, Rod.
Yeah. Thanks, Michael, for tuning in and sending us the love.
Yeah,
This is Trader Roundup. We're just trying to get 1% better every day.
Yep.
Hell yeah. And thanks, Kit. We forgot to thank you.
Thank you, Kit.
Yeah.
Kimmel,
Thanks,
I'll see you in
everyone.
a couple weeks, brother.
Yeah, see ya, man. It was
All
a
right,
great,
thanks,
great
everybody.
talk.
Smash that like button. Smash the subscribe
Yeah,
button.
traderroundup.com. If you
I'll
want
put
to
Kimmel's
learn
channel
more
in the
about us,
description notes.
check
So
it out. Yep.
join us on Monday. See you guys. Enjoy your weekend.
Yeah.
Yeah.
Bye.
Have a great one.